Coinbase announced their earnings this past week and the stock sold off. Now, regarding Coinbase, I have done a couple of videos on the stock. Most recent came in late July, where Cathie Woods sold out when price hit the monthly sellers level at 120. And a video prior to that, I talked about how Cathie Woods was the one who bought the last dip into this daily bias level at $50, only to see the stock go up 100%, and rightfully so, which is why Cathie Woods got out, as she wanted to take some profits. Now the stock is currently respecting this down trend line on the daily chart. A great way to go long is if price can get back down to this daily sellers level at daily buyers level at $78. Before we continue with the analysis, let's get into this article coming from investing.com. Coinbase tops consensus estimates, but trading volume drops almost 50%. And this is kind of really key. We've seen this with Robinhood as well. The retail traders are not really buying and selling in this case cryptos, because we are in crypto spring, but things are going to pick up definitely towards the end of the year and going into 2024, as the Bitcoin halving is scheduled for around this time next year. All right, so Coinbase topped consensus earnings and revenue expectations in the second quarter. The company revealed after the close on Thursday. Coinbase reported a Q2 loss of 42 cents. However, that was 34 cents better than the analyst expectations of 76 cents loss per share. Revenue for the quarter came in at $708 million, down 8% compared to Q1, but again above the consensus. The company acknowledged that crypto asset volatility declined in Q2 to multi-year lows. As a result, the macro drivers saw Coinbase global spot market trading volumes decline 48% quarter over quarter. Now, if you do look at a Bitcoin chart, it has been somewhat range bound between that, say 25K to 32K-ish, but the inevitable is about to occur. It's just kind of building momentum until we inevitably get this breakout, and I think to the upside, as Fed Powell may increase rates one last time before they have to start cutting next year. While Q2 metrics were positive and Q3 outlook contained no surprises, the print did little to address critical questions around retail volume and revenue diversification. Now, we've seen that Coinbase had to go away from their staking, a la Fed Powell, and so they have to come up with additional revenue streams. This, coupled with the lingering regulatory overhang, keeps us cautious. Maintain underperform, the analyst said. Now, before we get back into the analysis, let's look at a quick video coming from Bloomberg.
It's interesting here. I believe this is the first time that Coinbase's trading revenue was below that from other sources. What do you make of that dynamic, and is that something that you're trying to fix?
Thanks for the question. You're right. This is the first quarter where we've seen subscription and services revenue exceed our transaction revenue. I think it's important to share the market backdrop we saw in Q2, which is that we saw record low volatility, and volatility has been a key driver of our transaction revenue. We've seen also our focus on revenue diversification over the past few years continue to perform. So we saw growth in our blockchain rewards, which is our staking revenue. We did see a dip in our interest income. We shadowed that in our last earnings call as a result of the change in USD market cap. But we're really pleased to see the growth of these subscription and services products overall. I'll note, though, that we still think there is huge growth ahead in our trading revenues. Crypto has gone through cycles. We have periods of low volatility. We saw one this quarter, but we think that there's some continued growth in that to come. So we're looking to grow all revenue. That is our focus, not one versus the other.
Well, one part of the revenue area that has grown pretty meaningfully over the last year has been in interest income, but you did see a decline in the last quarter. How should investors be thinking about the volatility on that line and the rate of change when you think about any potential pressures coming down from the peak?
Yes. So as we shared, in the result of the banking crisis in Q1, we saw a decline in the market cap of USDC. USDC is one of the interest income drivers for us. So this is something that we've been working actively to stabilize, and in partnership with Circle, we both care very much about growing USDC market cap. At Coinbase, we've added rewards to our users. We've unified our order books between USD and USDC for our advanced traders. And for our international customers on our derivatives exchange, we have enabled USDC as the base trading pair. So we're doing things in product. We also think, and this is an exciting announcement today we shared about Base, that we'll be going to mainnet later this month, that Base is a layer 2 solution, which will enable faster and cheaper payments. We think this is an important innovation to lots of stablecoins, but we think that over time, if we drive down payment costs, if we can make payments faster, this will grow stablecoin and grow the opportunity for this type of revenue.
Clearly, you're investing in new products and services. The question I have, though, is the net loss has narrowed very meaningfully over the last several quarters. Is there anything that would keep you from reaching profitability in 2023?
We have shared our outlook for 2023 is to improve adjusted EBITDA on absolute terms on a year-over-year basis. So we're pleased to say that we generated positive adjusted EBITDA for the second quarter in a row. However, crypto is very volatile, and we're not making an outlook that is higher at this point in time.
And so, Alicia, you mentioned that you expect to see trading revenue pick up again. And I want to talk about trading volume, because we've seen that really decrease across the board. What would be the catalyst for a pickup in volume and thus revenue? What specifically might that come from?
So I want to break down the volume that we saw this quarter. So the overall crypto spot market was down 48% quarter over quarter on trading volume. Coinbase gained market share. We were down 37% quarter over quarter. But when you peel that back and you look at the customer behavior, we really saw the decline in volume from our advanced traders, from market makers on the exchange. And this is due to the low volatility environment that we talked about. Where we saw growth was on the Prime platform. So Coinbase Prime, which serves institutional customers, we saw growth this quarter, quarter over quarter. We also saw less decline for our simple trading products. So these are our retail users. So it really has to do with the volatility environment that drove the overall trading volume. As I mentioned previously, this is the lowest volatility we've seen in many, many years. So we have to go back 5 years plus to be able to see a similar volatility environment. In part, this could be the maturation of the market. In part, this is the overall dynamics that we've seen. However, we are still excited about the growth of volume. We are excited about the growth of subscription and services, and think that this is just a moment in time, as we've seen in previous crypto cycles.
And Alicia, I want to talk about the Coinbase International Exchange. Of course, that was launched in May. It allows investors outside the U.S. to trade crypto derivatives. And since launch, I mean, you've seen $2.1 billion of trading volume in the past 30 days. And given the regulatory temperature in the U.S., could you see a future where perhaps the international trading community is more important for Coinbase than onshore investors?
Well, it's important to note that our goal is to get to 1 billion people, and to do so, we're going to be a global company. It's also important to share that 75% of volume in crypto is on derivatives products, is largely outside the US. So we do think this is an important part of the market. We've made our first step, we said, to launch this product and these derivative trading pairs outside the US earlier this quarter. Sorry, in Q2 rather. And we're excited to add pairs, we're excited to see growth. We're in the early days, though, so this is probably not going to overcome US in the near term, but we think it's a critical part of the future story of Coinbase to be a global company.
I think it's worth asking about different types of crypto assets as well, because very interestingly, when you look at the trading volumes that you've reported, you're seeing that other crypto assets outside of Bitcoin and Ethereum are a lesser share than they were a quarter ago and a year ago. Do you see that people are moving away from those other assets, especially in the middle of this regulatory uncertainty, and moving further towards Bitcoin and Ethereum to some degree?
As you see in our results, we definitely saw that behavior in Q2 as there was a flight to quality, there was a flight towards Bitcoin and Ethereum. We are definitely seeing the impact on some of the longer tail of crypto assets at this time because of the regulatory headwinds. However, we will work through that, and I think that we are excited to share with the market tomorrow our motion to dismiss on the case that the SEC has brought against us, and really share why we think these assets can be traded in the U.S.
So as I mentioned, I'm looking for further declines in Coinbase as price continues to respect the short-term daily down trend line. And this coincides with Bitcoin, which is again just hovering and range bound between 25 and 32K. However, price is steadily approaching a great buy to go long if and when price gets down to the daily bias level at $78. Look to take price back up, first target being the round hole psychological number of $100. And what I love about this level is that it's right below some previous highs that we had back in February and then again in March. So this is a great level to go long. Also, this zone is right below the spike in price. So this is a great level to go long. One last note, we do see the 50-day moving average now entering the zone, roughly 50% in that zone. That's going to also serve as a dynamic support. In addition, we have the 100-day simple moving average also kind of approaching that zone. So again, great opportunity to go long if and when price gets down to the daily bias level at 78. Thanks for watching. Subscribe. Please like the video.